Today we have a really interesting guest, Steve Maizes with CrossCountry Mortgage. Okay, Steve, the big question, do you have any predictions for this year?
So the good news, almost all the experts think that interest rates are going to go down. And a lot of people, according to the economic reports, are showing that inflation is starting to get under control. If it gets under control, mortgage rates should continue to decrease, and they have, luckily, over the last few months. So my epic prediction for 2023 is rates are going to continue to go down, and I do think it's a great time to buy because housing prices keep going up.
If you were going to advise your own family member, if they have a bunch of cash in the bank or leverage and use a loan.
For many people, the government gives you a tax advantage when you buy a house. There is an instrument called the Mortgage Interest Tax Deduction. All the interest that you pay up to $750,000 is tax deductible to you. Also, can potentially use the money that you haven't spent on the all cash thing to buy another thing, to buy an income property, to buy a duplex, to buy a second property, become a landlord.
Right.
So I'm always a big fan of leveraging your purchases.
Right.
If a bank's going to give you basically free money, your rates used to be 20%, they're going to give you something in the 5s, take it. I would not pay all cash. And even if you do pay all cash, we can also throw on a mortgage for you afterwards, which is another trick. The basic relationship between bonds and mortgage rates is that the better the bond market, the lower interest rates go.
You've seen more people taking on more adjustable rate loans.
Because rates are higher, yes, I would say 70% of my buyers are not doing a 30-year fixed.
Right.
They're doing what's called, as you expertly indicated, they're doing what's called a 7-year ARM.
Yeah.
So it's the fancy way of saying the interest rate is fixed for 7 years and then it adjusts afterwards, but you're paying on a 30-year amortization. So the payments on a 7-year ARM versus a 30-year fixed, there's usually a half a point difference in rate. Mm-hmm. That's a lot of money on a mortgage. So my advice typically, especially if we think interest rates are going to drop and we can do a free refi, is get into the house. Do the 7-year ARM, pay the lower interest rate, save some money, pay down the principal, and if you decide to stay in the house for a long time and rates drop, then we can refinance with a 30-year fixed.
We've talked a little bit about some strategies that realtors are employing or advising their clients to use to deal with the inflated interest rates right now. Can you talk about some of those methods?
Yeah, there's some sophisticated strategies you can use in today's market. The biggest one that people are probably hearing about is the seller giving the buyer a closing cost credit.
Right.
And the buyer takes that money and uses it to give it to me, to my bank, to pay down the interest rate. We've even had some situations where if you have a crafty, smart realtor like yourself, who has a good working relationship with this listing agent, the seller's realtor, the price sometimes gets increased, and then the difference between what the price would have been and the higher price, we take, say it's $5,000 or $10,000, and we use it to give to the buyer to do a one-time reduction of the interest rate. It's what's called paying points.
Right.
A point is defined as 1% of the loan amount, but 1% usually equates to about a quarter point difference in rate.
Right.
That's a lot on a mortgage. So,
is there any other salient points or important things that you would like to stress?
When you're having a dating app and figuring out who you're going to go with, pick somebody who's got a good job in a W-2 also. Forget about the bikini, forget about the fancy Rolex or the guy's six-pack. Pick somebody with a good credit score and a good W-2.
I'm excited about your new dating app.
I'm trying to go.
Called Responsible. W2buyers.com.